All attendees are in listen-only mode.
Hey, good evening. How you guys doing? Lisa, hey Paul, David, Shane, Victor, Patricia, Carl, good to see you, buddy. Ben, all right. Orburn. All right, good evening, everybody. Disclaimer as usual, nothing presented in this webinar or video presentation, vocally or visually, is to be taken as trading advice. All content of the video presentation is for educational purposes only. You know, trading involves risk, so always do discretionary funds when trading, and that's CFT's rule 4.41. Okay. Today, retail sales and unemployment claims, right? The retail sales was the big one. Okay. You probably know that the market took a beating today. Not the forex market, but the stock market was down over 250 points last I checked, because of the incident in Barcelona, and that's really sad. But Paul was asking if I was in Barcelona. I am not in Barcelona at the present time. I will be heading there in about 2 weeks. Okay, almost 3 weeks. I'm going to be there on the 6th. So a day after Labor Day, I'm going to be heading out, and I'll be in Barcelona for about 2 months, and then I head to south of Spain for about a month, and then I head back right before Thanksgiving. So, well, I predominantly go there to trade. I've already done all the tourist stuff. All that thing is already done. So I just go there and I pretty much get an opportunity to trade 2 sessions, London and the US session. Totally different trading there, mainly because then those guys who are able to do that will say and confirm with me that trading after a good night's sleep is phenomenal. All right, that's why when I get back here, it's a little different. I change my schedule up a little bit. 2 days a week, 3 days a week, I trade London predominantly, and then 1 or 2 days a week I will trade the US session. Well, late London, I'll get up around like 4:35, and I'll trade all the way till US is over. Okay, like 11, 12. So that's pretty much it. Is my schedule. Over there, when I'm there, I predominantly start trading around 8:30ish. 8:30 is 2:30 Eastern. Okay, and then you trade 2 sessions or until you're done. Sometimes I get done in London. Sometimes I have to wait till the US session. But we can talk more about this the next session. Remember, next Thursday, the DMR session. Okay, next week, let's take a quick look at next week. Next week, from the 22nd to the 24th, we're only having DMRs. There will be no pre-market. Okay, no pre-market next week, and then the week after that, we're going to take a week off, let everybody go on vacation, relax, and we come back after Labor Day. So next week, no pre-markets. We will have DMR. So next week on Thursday, please bring your questions. All right, anything that we've covered. Don't ask me about stuff that we haven't covered yet, because I'll go over all the rules and all the setups starting in September. All right, so we have a structure in place on how to go over rules, what to look forward and what to look for in each level, and how to trade it based on a rule, very systematic and a rule-based system. Okay, all right, let's get started. Okay, so let's take a look at some of the harmonics that presented today. So we had GJ, which is still going on. All right, we had GC. Okay, GC. You guys can hear me, right? Okay, all right, just want to make sure. GC had a harmonic, really nice 1 hour pattern, really nice. I took this trade, it was so easy. We're looking for a pattern. There was a quarter point above the 13, below 13, above the 13, one leg out of the band, one leg in the band long. Lights out, easy 30 pips. All right, I mean, it does not get easier than this. I took this trade, I hope you guys took it too. All right, for 40 pips, David, phenomenal, man. I mean, literally, that's all you got to do. Harmonic fires, you wait for the pattern. If there's no pattern, there's no setup. Okay. Next one is, so we got, all right, the next one is GA. Okay, same thing. There's a quarter point right here. Jump to the 1 hour chart. Remember, we talked about the fact that sometimes they will give you an advanced W formation, which is exactly what that is. We were talking about that in particular. We're saying that one leg out of the band. We're waiting for that one leg in the band. You can't take the trade until RSI line is above the signal line, above the market baseline anyway. And price have to be above the 13. So my entry was right there going long, lights out. Anybody took this one? It was all there. Okay. All right, that was easy, right? Next one was GN. GN was a little bit more complicated, but we're still looking for the same thing. Okay, so above the 13, below, back above. Okay, you took it from here as close to the 13 as possible. If the candle is very big, in this example, right, if you measure the candle from here to here, it's a pretty big candle. It's about 47, 46, 47 pips. You got to wait till it pulls down to the 13, and you take it long. Nice little 30 pip move, 25 pip move. Okay, it did close below the 13. Okay, this is an anchor move, right? So your next move is your ID move. If you look at the 15, it's an ugly ID. Okay, that's the problem with the 15 minutes. Look at this. Red candle, green candle, red candle, green, red, green, red, green, red, green, right? Tough. Okay, that's your move. If you did not hit take profit, okay, if you're going for 30 pips, you didn't hit it, stop goes to break even or close below the 13, you kill it. And that's it. Done. Is that a good setup? The answer is yes, it is. One leg out of the band, one leg in the band. Where you take, by the time you take the trade, RSI is above the signal line, above the market baseline. Okay. Next one. This is current right now, GF. Okay. The other one that we were looking at was, actually that was it, right? I have my little whiteboard in here. Yep. GJ, GA, GN, GJ. GJ is still going on right now. Okay. GJ is still active. So let me see 1 hour if there was a pattern earlier. See, there was not a really clean pattern, right? You don't have an out of the band, in the band. You don't have that. And besides, this candle never closed above the 50. So it was too close, right? So, all right. So that was not a good trade for a long. So if there is no set, there is no set. But notice where the little black box is, the black box is down here. So there was nothing there. Okay. All right. That was pretty good, right? Pretty simple. 2 easy trades. Let's move forward. Yeah, some Lisa's mentioning about the tension between the U.S. and North Korea, and there could be some risk. So be careful with, try not to, don't try to hold the trade for a long period of time, because you don't know when that tension is going to flare up and when the markets are going to be very erratic. Okay, so be careful, please. All right. So we knew we were in level 2 this morning at the pre-market. We were looking for reasons to go short. Okay, so we knew price was up here. We're looking for a reason to go short. Let's see if they gave us a setup. All right, here's my blue tracer. They come right up to the blue tracer. They hit it again. Now, could you have taken this trade early? Yeah, somewhere in here. RSI line is below the signal line, below the market baseline. You could have. All right, to me, all right, remember, if I'm going for sort of like a second leg, half a bat, I like the trap to be on the lower EMA, like something like this, where they break and then your entry is there going short. That'll be your move, your ideal move. Okay, we haven't really covered this in detail, so I'm just going to leave that one alone. All right, then 1350 cross, first pullback, price has to close below all the EMAs. Okay, RSI line happens to be below them, almost at the market baseline. From here, it's kind of late, so I would have just passed on this trade, but that's your move to the downside. Okay, you're still actually in the trade, probably stop at break even. Nothing much going on. Okay. EJ. All right, so EJ, we called it at a level 2 with a potential reset. We're looking for a reason to go short. As you can see, price just dropped. No stop and high drop. Not much going on. There is, however, so here's the quote-unquote anchor formation, right? Blue Tracer, the whole nine, right? Here's the bounce trade. Here's my first pullback, which is kind of a dribble bounce, right? They never touched the water until here. This lines up with the AR00. The induced breakout traders, they come to the 00, which is the bottom of the Asian box. If they're going long, it's going to be on the top part of the Asian box, right? That's what Steve called it, right? The induced breakout traders, they come back, they hit it, they roll and they close and you short. Boom, that's your move. Okay? For an AR00, okay, you have to have the 00 line, which is the top or bottom of the Asian box, the 50 EMA, and the bouncer trap of the static. All right, price closes below, you short. Boom. All right, some of you guys will close it there, and then when it rolls over, you just have to wait for a nice shift, and then you just take the trade. All right, if the RSI signal line does not crisscross, like unlike this, it almost did, right? You can kind of sort of see it. Then you just stay in the trade. Okay. EC. Okay, we were in level 2. We were saying 50-200 cross. We're looking for what? Stop and high drop. And it did a straightaway. So I don't really see any setups in here. I don't even see an AR and ID. Okay, once we hit this quarter point, it got really interesting. Okay, there was no 50-50-50. There was nothing there. All right, notice nothing there, right? Notice this is very, very ugly. But what's kind of interesting is out of the band, in the band. That's what we call an advanced W formation. TDI will create the W outside the band. Inside the band, your entry RSI line above the signal line, above the market baseline, but price has to close above the 13. So in this example, that's the candle. Okay, it's perfect. You can see a nice angle of separation. RSI line signal line is pointing straight up. Okay, the only problem with this trade is when it pulls back, you got to measure from here to here. Okay, your stop is going to go right below the shift candle. No big deal, 23 pips, right? So you got to measure from here to here. It's got to be at least 17 pips. I can't believe this thing keeps jumping around like this, crazy. All right, the distance from here to here is 23, for example, right? From here to here, at least 17, which was 19. If you did take the trade, it's perfect. Boom. That's what you call an advanced W formation. Not something we haven't shown you. We've shown all of this to you guys. I actually went through it. Go to the curriculum if you're confused about what an advanced W is. Okay, there's a lot of good stuff in here, right? On this one, first, from the top to the bottom was 143 pips. ADR is 116. ADR is met or exceeded. Second of all, I am sitting in level 3. Third of all, there's a quarter point. Fourth of all, there's a reversal pattern, advanced W. Fifth, there was enough pips from here to here. Take the trade. All right, that's a good set. That's a good set. Okay, if you missed it, that's okay. It was a hard one. It was not easy. You're Aussie, just as beautiful, man. Measure from the high to the bottom. It's about 200, let's say 290 pips. Okay, more than 2 times ADR. In level 3, but less than 3 times ADR. Quarter point. Okay, let's see from the beginning of the day till down here, it's approximately 130 pips, which is ADR met or exceeded. I'm looking for longs. All right, absolutely beautiful. They come outside, close above the 13, back below, and just wait for it to close back above the 13 right there. You got one leg out of the band, one leg in the band. Either there, if you don't like the candle, you're like, the candle's too small. Wait for a proper shift candle, wait for the pullback, but just stop below the low. All right, but just stop below the low. Make sure there's enough pips, 17 pips, 16 pips, 17 pips, perfect. And then that's your move. Okay. Advanced. This one actually did close above the 13, so this is not an advanced. This is actually beautiful W formation, quarter points. All right, we have talked about the fact that ADR was met or exceeded. 132, 110, out of the band, in the band, absolutely Stunning. Okay, if you didn't like it over there, you want to take it over there. Once it closes above the water, that's your entry. Okay? I know it's 3 for 3 already. Actually 4 for 4, right? EN, I'm in level 1. I was looking for a reason to go short. Okay, so I came off this move, right? It did the little ID move in here, but the mayo was inside the Asian box, so it just kind of rattled around and it dropped. Okay, same thing. If you measure the ADR, it's about 120. So ADR is not met or exceeded. Not. Okay? All right. This one, I would not take the reversal. Why? ADR not met or exceeded, so I cannot take a counter move. I know it's called a New York reversal. I know they hit the quarter point, which is actually not only a quarter point, it's a round number, 1.600. And I do have this one. Obviously, this is just straight down. This is out of the band, in the band. All right, when price closed above 13, they're going long right there. Okay, and then they followed that up with half a bat, and here going long. Okay. Yes, it's a setup, but I would have passed on it. I would not have taken it. Okay. Tomorrow we're waiting for a 1 hour 50-50 bounce or an M off the mail on the 15. GU. Okay, so GU, we said it dropped from here to get about, let's say 190. Okay, so 170. So we are kind of in level 2-ish, right? We're looking for reason to go short. 1350 cross, first pullback short. Gorgeous, right? There was the pound news. This is the pound news, and then it closed. You could go short right after the news because it's not going long. Okay, that's the 1 hour 50-50 bounce short. Boom. Okay, look at the 15. Close below 13, back above, back below. Okay, if you took this trade and it just trapped, take it again. Okay, this is an M. Only 3 pips off the high. This is an M. This is second leg. This is second leg, half a bat. Right, your entry there going short. After the news. Boom, that's your move. 30 pips, easy. Okay, followed by an ID move, right? This is an ID move. This is a little late. I wouldn't take it, but that's your move to the downside. Okay. Anchor, ID. Okay, it's always anchor and then ID. Okay. GJ. Okay, so we call this a reset. We're looking for a reason to go short. Here's my first move to the downside. All right. So let us take a look and see if it played out correctly. All right. To me, it didn't. No stop hunt until here. Right. So they were just kind of initial high, initial low. Price was channeling. Nothing there. Okay. Some of you may have taken this short over here. Okay, 17 pips and took a little scratch, -2, -3. Okay. Now with this or one of these two touched the male, perfect, right? Short. Now some of you will say, hey, that's a level 1. I need a visible stop on, which it did right here. Close below 13, back above, back below. That's an M. Now ideally on this, in that example, I would like to see out of the band, in the band. It didn't really do it, and this short was, I mean, it paid out nicely, more than 30 pips, right? But if all it did was touch that mayo, it would have been lights out. M off the mayo, level 1 safety. It is a safety, but it's just not as clean because the way it looks. Okay, I know I'm in level 1. I'm looking for short. You need a visible stop on, which is right there. Boom. Okay, you couldn't have taken this short over here, right? You couldn't have taken the short over here because RSI need to be below the market baseline. You see, you had the one leg out of the band, one leg in the band, but RSI was not below the market baseline. So it came back to the high. If it just punched through the high, it would have been lights out. Short. Some of you may have taken this anyway. It doesn't matter, right? You don't need an M off the mayo. You just need a visible stop on. But it just looks a little ugly with that, the way it looks. Okay, if you took it, congratulations. All right. Would you please explain the fail harmonics? There's nothing to explain, Lisa. If with the harmonics, right? If I don't see a pattern, there is no setup. Okay, that means a fail harmonic. A failed harmonic means there is no pattern. That means you cannot take the trade. That's all it means. Nothing more. Don't take more into. Don't read more into it than it is. That's it. Okay. A harmonic, 4-hour harmonic, gotta have a 1-hour pattern. If the 1 hour does not give you a pattern, you do not have a set. That's it. Move on. Okay. All right. There's the failed harmonic in GJ. See, that's the problem. This one just continued going down. According to this, I know there was a harmonic. I marked it, but I really didn't. I don't know what happened to the harmonic. It just disappeared. All right. So if in fact, if there was a harmonic here, there's no pattern. There is no pattern. Okay. If I was looking for a long over here, you're like, okay, cool. One leg out of the band. I'm looking for one leg in the band, which never really happened. Right? Because if price was dropping, they would have actually given me a little in the band move. Out of the band, in the band, RSI above the signal line, above the market baseline. Then you're like, okay, that's an advance. But this never went above the 13, below the 13. So that right off the bat is nothing. Second of all, you don't have out of the band, in the band. So you have nothing. Okay. GC. All right. So we were in level 3. We had a harmonic. We talked about this. Long. Boom. Easy. Too easy. Okay. Same thing with GA. Okay. All right. Same thing. See? This is out of the band, in the band. Even though this one did not close above 13, back below, back above, doesn't matter, right? Out of the band, in the band. You can't take the trade until price closes above the 13 and RSI line is above the signal line, above the market baseline. So the only candle, that first candle that closed above the 13 is right there. As you can see, RSI line is above the signal line, which is the red line, above the market baseline, which is the yellow line. Wait for the 1/3 pullback, and you're off. Yep, there is no clean pattern per se, but that's an advanced W. Okay. GN also had a harmonic. Okay. Also had a harmonic, right? Out of the band, in the band, right? So now you're like, great. But notice a little gap in here. All right. So you may have not taken that trade. If you did, let's presume you took this trade here, right? Boom, right there. It went up first, 25 pips before it closed back down here. Obviously, because it doesn't go this way, and then this way, right? It's probably going to go this way first, and then going to come down and close here, right? So it went 25 pips. If you went for 20 pips, you hit your target. If you went for 30 pips, you did not. Okay, you move your stop to break even, you get taken out break even, you wait for the second leg, you take it again. All right, candle is pretty big. All right, 47 pips, you gotta wait for it for a 50% pullback or close to the 13 EMA. That's the magic EMA, the 13. Okay, you take the trade on the 13, your stop goes over here. See, 25 pips. Now if you're going one to one, then you hit your target, right? Easy. Boom, 29 pips, you hit it. If you went for 30 pips, you just missed it. Okay, it went 29 pips. And then it closed below 13, so you have taken a scratch. See, that's the cool part of waiting for that pullback and taking the correct trade, is because even when you're wrong, you'll take a scratch, you won't lose money. Right? That's the best way of trading. Hey, I'm wrong, I still didn't lose money. Or you're not really right or wrong, I tell students all the time, is whether there's a follow through on your setup or not. Now, if you take a trade and there is no setup, yeah, that's wrong. That's MSU, that's making stuff up. Don't do that. You will lose in the long run. Trade the set. Okay, you got to trade the set. All right. GF. Okay, so we're in level 2. We're looking for reasons to go short. All right. So I'm in level 2. So I got my 50-50 bounce in here. So easy, right? It comes in, boom, hits it, short. That's the M of the male. Obviously, if you look at the 15-minute chart, it is going to look like it's crazy. Okay. You may have taken it over here if you took it on the 15-minute chart. Okay. All right, so your best bet, boom, quarter wood, short. Okay, that's level one. Your next move is M&W of the male. That means it's got to touch the water. That means if it doesn't touch the water, you do not have a set. Sometimes it misses it on the lower time frame. You're going to wait for it. I mean, on a higher time frame, sometimes you have to come in here and you can see them touch the male. But in this example, it just misses it. Otherwise, if this one does touch, your entry is right there. It's lights out. Okay. Aussie. All right, Aussie, we're on level 2. We're looking for it to come back down, hit the stop low and rise, right? 50-200 cross. So this is a counter move, okay? I mean, how beautiful is this? You got one leg out of the band, one leg in the band. Okay, you're going to wait for price to close below the 13, RSI line below the signal line, below the market baseline. And that's it. You short it. Boom, right? Now, in this example, it does close above the 13, so you have to take a little scratch on it. Okay, now, this makes it a half a bat, right? Close below 13, above 13, below 13. This becomes your nadir. Okay, so you have to wait for the candle to close below the body. Okay, how do you know it's a half a bat? The distance between the second leg and the first leg cannot be more than 10 pips. This is 27, so I'm waiting for them. So if I don't like this candle because it's got wicks on both sides, I'll prefer inverted hammer, so I'm going to take the short over here. I have more than 17 pips here. My stop goes right above the swing point, my second leg. Let's say 20 pips. I'm going for 20, I'll hit it. Okay. Advanced stem. Out of the band, in the band. All right. And you, we were expecting a reset with a potential level 1 long. Okay. Look at this. Out of the band, in the band. Same thing, right? Price closed below the 13. Now, in this example, all right, RSI line not below the market baseline, so I can't take that trade there. Can I take the trade on the next candle? Well, it does touch the 13. Okay, RSI line is below signal line, below the market baseline. I have to measure from here to here. If it's close enough to 17 pips, I'm going to take it. It's not. Okay, it's about 14, so it's a little tight. So I would have passed on that trade, which I did. Okay, I did not take Aussie, but it was there. All right, in this example, I'm waiting for it to do the bounce and then go back long. Maybe give me a multi-day M structure and then roll to the downside. Okay, dollar Swiss. Okay, it's kind of weird, right? The way it looks. If you look at the 4, I think we talked about this. Right, it's coming right up to this area and it was just kind of bouncing 50-200 cross. So long was a better trade, ideally. But if you notice the round number, we're just kind of bouncing and then it bounced again, it bounced, and this time it trapped and it came right back down and it bounced again. Okay. All right. So we measured from here all the way back up, very close to this high, which was 190. Okay. This one came up to about 185. Close enough. It's like difference is 5 pips. So it was between 2 and 3. Obviously, this 75 150 is 2 times ADR. So this was a little bit more than 2, less than 3. We just kind of marked it as 2. But this was really nice. Okay, 1350 cross, first pullback short. It's a 50-50 bounce. Boom. Okay. If you look at the 15, you're looking for what? An M off the male. I mean, is that nice or is that nice, right? Closer to 13 back above, back below. Okay. You could have taken the trade over here. If it traps, kill it and then take it again. This is called a second leg half a bat, right? First leg, second leg. The second leg created a half a bat, type 2, and your entry is right there going short, 50 pips. Okay. Cannot miss layups like these, man. These are just absolute layups. Okay. Beautiful close at the extreme of structure. Stop and high drop. We were a little concerned about this pair. Okay. But it did play out very nicely, especially with the close to the 3 EMAs. This was the concern, whether it's going to close right here, and then you're like, I don't know, it could bounce here, it could bounce there. Okay. Dollar CAD, we had it at a huge drop, 2 times ADR, right? We were expecting it to come back at the stop high, roll over, and drop. So this was actually like a half a bat. Got a one leg out of the band, one leg in the band. This did close over there. RSI line, it went up about 19 pips. If you went for 20 pips, you just missed it. Closed below, and then it closed back above the apex right here. Okay, with a nice shift candle, your entry is right there going long, 20 pips. Now, this is the counter move. I personally won't take it, but it is available to you. Dollar yen. This is a stunner. Absolutely gorgeous, right? We were expecting this. Here's an advanced stem, right? Did not close below 13 all the way up, and then it closed right there, right? You got out of the band, in the band, right? So in theory, your entry is right there going short. RSI is below the signal line, below the market baseline. Boom. That's your first move. 1350 cross, first pullback. I have a safety or a 1 hour 50-50 bounce. You could have taken it as a 1 hour 50-50 bounce, or as a safety. Okay. Advanced stem, out of the band, in the band, right? But sometimes they do these little traps, which is the type 2. So because of the fact that it never closed below 13, this is considered a half a bat. You're looking for a reason to go short in here. Boom. It was so fast, the 20 pips was so fast, it was a matter of, I don't know, some of you guys said hit TP in 4 minutes. Okay, notice it never closed above the 13 and it just continued dropping. Or a nice 50 pip move, 58 pips. Alright. This was the Mona Lisa. Okay, even nicer than dollar Swiss. Alright, because this was in level 1 to the downside. Beautiful shift candle, no wicks. 1/3 pullback, lights out. And finally, Euro Pound. Euro Pound was one of the pairs we were saying this kind of level 2, but it looks a little choppy. That's a pass. If you pass, that's good. If you didn't, okay, if you're looking, because I'm in level 2, I'm looking for longs, right? So I'm looking for longs at the low of day. I'm not looking for longs at the high of day. Okay, longs, low of day. That means when it sets the low of day, you got a blue tracer. You got the blueberry, which is outside the Asian box, and you got a out of the band, in the band. See over here, in the band, doesn't matter if the in the band. You can't take the trade until RSI is above the signal line, above the market baseline anyway. So I always call it out of the band, in the band. It could be 10 times in the band, it doesn't matter. Okay, as long as it looks like this, it doesn't go above the 13, below 13, back above. In this example, still an advanced W formation, a third pullback. Stop goes below here, 13 pips, and then straight up. Here's your 30 pip move. Okay, that's an advanced W. Why is it advanced? Because price does not show the W above the 13, below 13, above the 13. TDI does. It'll go out of the band, in the band. That's the definition of an advanced pattern. Okay, we've covered that in detail when I was doing the basic patterns presentation in the DMR. Okay, awesome. Any questions? Jose saying it was UJ didn't take it because it was too close to the low of day. What do you mean low of day? As in, like, there's 33 pips here. That's my low of day. Just take it. Go for 20 if you don't like 33. Okay? That's the Mona Lisa. Okay? Okay, EG looks like an ID50 now. Are you going to project to go short tomorrow? No. I have no idea what's going to do. Why? Because it doesn't look nice. It's range bound. This is what I call a range bound market. That's what I call a trending market. Boom, boom. I can see what they're doing. Like this. Boom, boom, boom. When it does this, in the same level and it goes back and forth, I have no idea. It could go long, it could go short. I have no idea. As of right now, to me, it's long. I know you think it's short because the 13 is below the 50, but to me, it's long, right? So because I think it's long, I'm not going to go short on it, right? Besides, there are so many better looking pairs than this one, so I won't even look at this pair because right now it's not. See, like if it did this, came out of here, 180R close extreme structure, I'm expecting this, I'll look at it. Right now, I got too many hits to the water. I have no idea which one's going to play out. I'm not going to touch it. Okay? Will you trade it or pass on it? Honestly, I won't even look at it. When I'm doing my check down, I look at this, I'm like, boom, pass. It got to be crystal. See, like this is pass to me. I won't even look at it. All right. But when it does something like this, close the extreme structure and it pulls back, I'm looking for a safety in here. I'm looking at this pair. This is my focus pair at that time. I like a quick pull away. That way I know 180R is met or exceeded. I know they're going to come back, hit the water, and then drop. Just like this, right? I was expecting this to bounce here and give me a safety. Didn't happen. It did it the next time. Okay, so I may have gotten my safety here, but it's not very clean. I got my 50-50 bounce in here. I'm going long right there. It's the same thing. They do the same move all the time. All right, when do you measure the distance between the RSI line and the static? When do I only measure it if it's slightly off. So for example, if I'm looking for an ID move, I think in the beginning of the okay, I'm coming off this move here. If I'm expecting an ID move, then I'll measure it. Okay, if I'm expecting an ID move, then I'm going to measure the distance. Okay, only on an ID and an AR. The distance between the RSI line and the static cannot be more than 1.5 on an ID and an AR. All right, because the further it goes from there, the higher the probability that it's going to go and hit it later on, and then you're going to get messed up. Like here, right? This is not really a clean set, so it's too far away from here. So if I measure from here to here, it's like 4, so it doesn't work for me. That's the pass. Yeah, it touched the water, but that's not clean enough for me. I won't take it. Does it work? Absolutely, it does work, right? 40 pips, but that's not my set. It doesn't qualify. But when it qualifies, they're going to get beat up. Okay, so homework it. Homework the bounce trades and see for yourself. Okay, awesome. All right, no questions I see. So what I'm going to do is I'm going to move forward with our presentation today. ADR and Blue Tracer. Blue Tracer, that blue line. Previous day high and low. Okay, ADR. Okay, so ADR or average daily range. Well, why is that important? Why did Steve talk about ADR? Why did Steve talk about the average daily range? Well, ADR can be described as the allotted amount of daily movement allowed to the market makers by the global powers, right? We joke about the Illuminatis and the World Bank and the IMF and the FOMC, all those people, right? They tell these banks, market makers, where and how much they can move. They just cannot move as much as they want, right? The ADR is controlled in order to stabilize global markets and commerce between countries. Otherwise, you're going to get a rogue trader and they'll destroy the global market and be a trillionaire by tomorrow. So they will not allow people to do that. Okay. Look for potential reversals back into the range once the ADR has been met or exceeded. That is the ideal way to use the ADR for a reversal. Okay, and you can also use ADR for projected potential take profit targets. Okay, if the markets are moving nicely, you're like, you know what, I think the market is moving really nicely, everything seems to be trending, I'm going to hold my take profit to close to 1 times ADR. Don't be like, oh, okay, the ADR is 130, I'm going to go for 130. How about 120, just in case it doesn't get to 130? Okay, all right, so here's an example of using ADR for a reversal. Okay, this is today, the 17th. Okay, so as you can see, the red line, right, that's the ADR marker. Price comes down, quarter point, they hit it, close above 13, back below, back above, one leg out of the band, one leg in the band, boom, long. Okay, this is a reversal, a perfect reversal in the shadow box, New York reversal, in the shadow box after the ADR is met or exceeded. Okay, that's your best bet. Okay, look to trade the reversals back into the range. It's easy. Okay, the ADR is going to be met. You're going to see these red lines. Then you look for your pattern. In this example, it's an advanced W. Out of the band, in the band, boom, long. All right. Wait for your reversal patterns after the ADR line triggers. Wait for it. Wait for these lines to trigger. Once the ADR line triggers, this happens to have this is pound Aussie. This happens to have today the harmonic. All right, happens to be one leg out of the band, one leg in the band. RSI is above the signal line, above the market baseline. Price closed above the 13, 1/3 pullback to the 13 EMA long. Easy. Okay. Do not complicate it. Keep it simple. Leah is asking a very good question. If ADR is hit, would you consider a reversal trade back in level 1? The answer is whenever ADR is met or exceeded, that means it's very far from the peak. You're expecting price to come back to the water and the male. First target is water, second target is male. So yes, you can trade it back into the range as long as ADR is met or exceeded. That means they came out, they went straight down, set the low of day, gave you a reversal pattern, showed that the ADR was met or exceeded. That means the market makers cannot go any more lower. Gave you a reversal pattern, you just take it. Okay. All right. On the counter trend trades, your targets are the water and male. So in this example, here the 22 setup, right? M here, and then they come back right to the blue tracer through another M. ADR is met or exceeded. Trade back into the range. This is a level 3 move, so I'm trading back into the range. After 3 pushes, right? Push 1, consolidate. Push 2, consolidate. Push 3. Above the 13, below 13, back above, long. Okay, in this example, out of the band, in the band, RSI is above the signal line, above the market baseline. When I take that long, lights out. Okay. One times ADR can be used as potential target areas. In this example, the 5200 non-cross safety, right? I'm in level 1 short, close below 13, back above, back below. I don't need it out of the band, in the band. I mean, it would be nice, but that's a shark fin. Okay. Safety, right? Level 1 safety, short, boom. Right? The distance from here, obviously the older chart, to down here is 185 pips. You can see that right there where my arrow is pointing. If you look at the ADR, it's 110 pips. Close enough. Okay, maybe a little bit more. Let's presume that the ADR is 125. Still, it's not 185. So ADR is met or exceeded. I'm trading back into the range, right? I can trade back into the range in this example. Or, as in this example short, I take the safety. ADR is 185, I can go close enough to the ADR. Let's say I presume my ADR is 110, then I'm going to go for 100. I'm just going to go a little shy of ADR because I did not grab the trade right off that high. Okay, so I got to take into account how many pips I missed off the high based on my ADR. So let's presume it's 10 pips from here to here. Then I'm like, cool, I'm going to go for maybe 90 pips, maybe 80 pips, because I got to leave some room just in case it pulls back, because sometimes they will pull back. They'll run a third and then they'll pull back. Remember, pushes, push one, pull back, push two, pull back, push three. This one is just one big push. Okay. Again, ADR is met or exceeded. Here's my reversal back into the range. First target is water. Always target the water because sometimes they won't get to the male. That line up with the ID move and start dropping again. Okay. All right. Next one. ADR times 3 is just a guide to hold for a swing trade. All right. So here, for those people who likes to swing, like to take longer trades, like to hold for a longer period of time, this is for you. Okay. So here's you see this black line, here's my my crosshair, right? From here all the way down here, as you can see, 355 pips, right? And 3 times the ADR happens to be 355. So let's presume from there to there is 355, 3 times the ADR. Okay, 3 times the ADR is target. Now, based on when you get in. So for example, here's my 1350 cross, here's my first pullback. So you're like, okay, that's my safety or my 1 hour 50-50 bounce, right? I'm going to go short. Boom, you take the trade. Now you can hold it and you're like, okay, cool. So if the distance from here to here is only 1 ADR, that means I've got 2 more ADRs to go. So I can hold it for a longer period of time for 2 ADRs minus a couple of pips. Okay? You don't have to get out at 50 pips. I like to get out, and Steve likes to get out because when I go to sleep, I have no idea what's going on in the world. I don't know, there's a tsunami, there's a I don't know, craziness going on, terrorism, whatever, right? Issues that'll affect the market. I don't want to be sitting in there when they throw these big spikes. So that's why I just get out. But Doug and all of those guys like swinging. So they like to take the trade and they'll hold it. Okay, for 1 ADR, 2 ADRs. So if I get in level 1, that means I got 1 ADR drop, 2 ADR drop. So I can try to pick my take profit to be 2 ADRs, or a little less than 2 ADRs. Okay. Now, if I grab the trade M and W off the male because I'm in level 2, that means I only got 1 ADR left to go. So I can target my target as 1 ADR. Okay. So it gives me options with using ADRs to know when to take profit. Okay. All right. Next part of this presentation is the Blue Tracer. So why is the Blue Tracer important? Why does Steve talk about the Blue Tracer? Why did he even put it on the chart? Okay. Oops, sorry. It price vectors to the lower high the previous day and pulls away and creates the Blue Tracer today. So the previous day and today, right? The Blue Tracer is the previous day's high or low. It's where the volume is trapped from the previous day. Okay. Market makers will either leave the volume trapped because they got enough, or they're going to exploit those numbers to even grab more money because people trade support resistance. All right. So they're going to spike that low. Understanding the market maker's next move at the Blue Tracer is very important. Okay, the 3 times ADR value and the Blue Tracer often gives us a 12, 21, 22 and head and shoulder setups. Okay, so therefore watch for traps at these significant areas on the chart. All right. Again, starting in September, we are starting to go into our setups. 12, 21, 22, all the setups that are coming in each level. What to look for in each level, the rules of engagement, and then if you do miss it, what is next? Okay, it's going to be a very structured curriculum, so hopefully you will be there to enjoy it. Okay, So in this example, vector, right? We talk about vector. This is the vector, right? Straight up. And then they pull away. This little pin bar, railroad tracks, or sometimes these pins, is where volume is trapped, trap volume. So you call it trap volume. All right. And then in this example, they did not break the high because there was so much volume trapped up there, they did not want to break the high. So they're going to pull away from the high. So they're going to create the reversal pattern. All right. You don't want to short here because, as you can see, it's only 21 pips. It's very tight. So your best bet is when they close below the water. That's the significance of the Blue Tracer, understanding whether they're going to exploit these trap numbers or not. Railroad tracks, that's the trapping move. Pin to the high, that's the trapping move. There's some volume trapped in there. Okay, trapped volume. So in this example, head and shoulders at the Blue Tracer. Here's my Blue Tracer. Here's my outside structure, vector. Vector means boom, straight drop. A lot of pips, right? They come back up. They come back again faster with news. Then they pull off. Then now you can start seeing the candle getting smaller. Come back one more time. Shoulder, head, shoulder. Amputate the left shoulder. Okay. The head, most of the time, even though the outside structure will sometimes give you out of the band, the head, in most cases, will give you out of the band as well. Okay. So that's why you can easily amputate the left shoulder and still get out of the band, in the band. Okay. Out of the band, in the band. These are not shift candles. These are very tiny candles. They're nothing. So obviously this is nothing there, right? So there's nothing there. And this is not, the pin is half the candle. So that's nothing there. You want a shift candle with no wicks. We'll cover shift candles very close to the end of the year. All right. Or maybe a little bit next week, maybe. Let's see. Let's see how that thing goes, right? And the shift candle is absolutely vital. You have to know which candle is the shift candle. Why is that significant? Because that's when the market makers have done their work at the low or high of day and they're ready to move. All right. Okay. So here's my move. Boom. Long, right? One leg out of the band, one leg in the band. RSI is above the signal line, above the market baseline. I'm off to go. And then they give you a second leg half a back. There's another position going long, followed by an ID move. This one, you need at least two pins to the water. Here's one pin, here's the second pin. Boom. Then you're looking for longs in here, but that's a little too late in the day, so not interested. Okay. Setups at the Blue Tracer in level 3 is the easiest to see. We did not talk about, I'm not going to go into detail on the setups itself because we're going to do that in September. But setups at the Blue Tracer in level 3 is a good indication of a reversal pattern or a reversal setup at that level. So this is level 3. I'm looking for shorts. So here's my setup. Here's my trapping move. Railroad tracks the trap. Here's my Blue Tracer. They come up, they hit it. M, boom, shift. That's my shift candle. It's big and it's done with conviction. Okay. RSI line below the signal line, below the market baseline. 1/3 pullback. Boom. Could be news. That's why you gotta wait for that pullback and then just take it. Right? But it's easy to see. That's why we did the 12, 21, 22s with the Blue Tracer. Otherwise, it just looked like a mess. It's just going to be all back and forth. It's crazy. So we have to simplify the setup. All right. Here's an example of setup at the Blue Tracer in level 3 on the 1-hour chart. This is level 3, 2, comes up, railroad track. So we're like, great. We know that's an outside structure. There's some volume trapped in here, right? They go right up, right back down. People are trapped. They come back. They create that Blue Tracer. They exploit the numbers. They hit it. They induce short. People go short. End of the day, they come right back, induce long. Close below 13, back above, back below. Beautiful shift candle. Not really beautiful, but probably the news, right? RSI below signal line, below the market baseline, short. All right. Okay. So here's the quote of the day. Right? If you want it, you work for it. It's that simple. Okay, that's our job, to show you what you should be doing, what setups you should be taking, when you should take it, what it looks like, and the expected moves and your profit target. Your job is to work what, figure out what works best for you, but it'll take work because you have to figure out what works best for you. I know what works best for me. You got to figure out what works best for you, and you got to keep it simple. Do not complicate it. People love to complicate it because it looks like they are trying to work for NASA. I know some of you do, but don't make it that hard. Find one setup, master it. I know when we're young, we always talk about, well, would you want to be a jack of all trades or do you want to be a master of one? And we always say master of one, but that's literally what it means. Okay? Master one setup, you will be very, very wealthy. Master two setups, it's over for the market makers. Okay? But one at a time. You can be very wealthy just with one setup. But if you master two of them, forget it. They're going to get beat up every day. Okay? All right, awesome. Well, thank you very much for being here with the questions. I look forward to seeing you guys tomorrow for the pre-market. Thank you, Carol. Appreciate the kind words. Leah, Lisa, David, appreciate it. I mean, that's what we're here for, man. We're here to make sure that you succeed. All right. If you have questions, do ask. Please bring questions next week. Okay. We want to make sure that the back end of the year, from September onwards, everything kind of falls into place for you guys. Very clear rules, very clear definition of where you should be and what you should be looking for. And then we're going to finish the year with you guys sending me emails telling me how well you guys are doing. All right, that's the deal. All right, guys, have a great night. I'll see you guys tomorrow morning for the pre-market. Ciao.